nice to be here. My name is Tage Kenel Okafor. I'm the Africa correspondent for TechCrunch. So I report on startups and venture capital in Africa for TechCrunch, one of the leading tech publications globally. And today we'll be talking about venturing into Africa, perception versus reality. And we have esteemed panelists here. I would like them to introduce themselves. We have Magdi, Mimi, and Theo. But just let the audience know all about you before we get started.
Sure.
Magdi, yeah.
Yes, Magdi, I'm the managing partner of African Renaissance Partners. We're a new fund focusing primarily on East Africa. We do early stage tech investing in high impact startups that are solving real problems for Africans. We believe that's a great growth opportunity.
Thank you. Mimi?
Yeah, thanks so much. Good afternoon, everybody. My name is Mimi Kalinda. I'm the CEO of a company called Africa Communications Group. We're a PR, reputation management, and branding company based in Johannesburg, Nairobi, and Cote d'Ivoire, Abidjan. And also run a platform called Storytelling and Leadership, where we work with founders, tech entrepreneurs like yourselves, really get to the power of their own stories and how to communicate those stories for a purpose.
All right. Hi, everybody. My name is Steve Toria. I'm the managing partner of Jazari Ventures, a digital health, medtech, and biotech VC fund in Africa. We're early stage, investing between $200 to $2 million, and really focus on growing the ecosystem in healthcare. Thank you.
All right, a round of applause for our panelists, please. At least for excitement here. Thank you. All right, so today's session will be about uncovering the realities of investing in Africa. And so we'll try as much as possible to challenge any preconceived notions, right, about, the challenges and the opportunities that lie on the continent. My first question to our panelists today is, so one of the most common preconceived notions about investing in Africa is the perception of high risk, right? So from political and economic instability, currency devaluations, and, business hostile environments, right, for investing, right? We see some global investors and funds not coming into the continent because of these obstacles. So do you feel like these misconceptions are more reality than the other way around? So are they misconceptions or are they actually reality on the ground? Do you want to go, Mike?
Sure. Look, there are risks everywhere. I don't think we can deny that every market in the world has a lot of risks. Venture is by nature risky. But it's also very clear that the perception of risk in Africa is far higher than the reality is for us, in our experience. There's about $3 billion a year or so that gets invested in venture in Africa. There are many companies around the world that lost more than $1 billion, in some cases multiple billion, more than all of the VC that got done in Africa per year. I would say that the question isn't, is there risk? The question is that risk properly valued? And because of distance, because of unfamiliarity, because of various biases that are natural to people, we believe that the risks in Africa, the negative information gets amplified and the good information isn't well known. So those who can properly value the risk in Africa have an advantage taking a position in one of the best investment opportunities in the world.
Sure, Steve, do you want to add to that?
Yeah, absolutely. I think we've been talking about storytelling. And one of the key things that actually drove me to come back to the continent is about stories. Essentially, the idea of the difference between perception and risk being an opportunity came from the fact that I observed Mohamed Ibrahim, the founder of Celtel, built Celtel as one of the first interoperable systems in East Africa, exit at more than $1 billion, and then created the foundation and the fund on the back of that. So the perception of risk has always been there on the continent, but I think it's up to us to really demonstrate that the risk-return profile is commensurate with what investors are looking for, and really tell international investors that they need to partner with us who know the ground to say, look, take this particular type of risk and not these particular ones, and tell the stories about it.
talking about stories and storytelling, how do you see your company's position in helping amplify reward and risk in Africa venture and just investing in general?
Yeah, so I think that there's the story and then there's the storyteller. And I think that it's important to also ask ourselves who's telling the story of Africa being a risky place and what's their experience of Africa as a place to invest, right? And I think that when you look at where the stories are coming from, I'm willing to bet, and I think data backs this up, that most Africans who work in Africa and have really put, their roots here and put their money where their mouth is, will consider we're aware of the challenges that the continent has, but I think most of us are very optimistic about the returns of working and investing in Africa. So I think whenever we tell a story, it's important to ask where that story comes from. Africa, for me, is a continent that you have to look at from a long-term lens. It's not something that it's not a place that you come and invest and kind of have a fly-by-night relationship with, and it's also to Seru's point about building partnerships with people locally who understand the background, who understand the cultural nuances, who understand the fabric and the texture of what Africa has to offer. And I think that storytelling it plays a big role. And I think one of the things I'd like to add, and the reason we do the work that we do, is at some point we have to have a critical mass of successful entrepreneurs that come from Africa, and we're getting there. I think we're definitely at the tipping point, but we still need to invest in the type of platforms, media, etc., those microphones that help to amplify those stories. And I think with time we'll start to see that the stories become a lot more true, fair, and balanced, and reflect the reality of the continent.
I totally agree on that. I mean, talking about storytelling, I try on my end, right, to
Yeah.
paint not paint the continent in the good light, but tell it as it is,
The
right?
reality.
The reality. But at the same time, it becomes hard when after explaining, okay, Africa venture capital ecosystem has been around for about a decade, right, and we've had only a few exits. So to keep convincing investors that this is a good market opportunity, in spite of like you said, we need lots of success stories to be able to really amplify, right, that Africa is a viable venture market, right? So how do you marry that? Like, again, perception and reality is like, okay, yes, Africa is a great market to invest in. We have a youthful population. Our ecosystem is booming, right? Mobile penetration and internet penetration is booming. But at the same time, we have not hit the target of exits or founders becoming successful. So how do you?
Can I pick this one? That's a
Okay,
particular
sure.
of interest to me. Actually, I would like to ask the audience who knows about a company called InstaDeep. Show of hands. Aha, see? InstaDeep is actually the biggest exit that happened on the continent with BioNTech. 768 million pounds. Unfortunately, hardly any Western media have picked it up. Hardly any African media has picked it up. The story.
Well, I would disagree. I did pick it up, though.
No, you. But as I said, hardly any.
Okay,
So
yeah.
I think it's all about the scale of sharing the good news versus the bad,
I
right?
see, yeah.
Right? And there's so many other exits. I'm from Ghana. I exited 2 companies in Ghana. I've tried to broadcast it. No local media picked it up. No papers, radio, nobody was interested. But if you talk about the flood in Accra because it rains, oh yeah, there's going to be a lot
I
of
see.
news, right? So it's really about storytelling and really actually figuring out a way that to really bring out those exits to demonstrate that they exist, right? Same thing. I mean, I can talk for long about that, but I think the critical message is let's own a narrative and demonstrate and show that exits are happening, number one. Even the next 18 months, you will see a lot of M&A, buy and build transactions happening just like anywhere in the world because everybody wants unit economics, right? So essentially, let's communicate more about that, and I know it's not just you, but
Yeah, it's all right,
broader
yeah.
media, right, to really make them understand that there's something that needs to be picked up.
Yeah, I think I can just add to that and say, I mean, we
Yeah.
went through an acquisition process as well. And like you, no African media picked it up, but, international media told the story. So we do have an issue there. But also just to relook at the question and say, is the perception, asking the right questions is really important to get to the right answers. So when we talk about the perception of the continent, are we talking about, is that really what we should be focused on? Or should we be focused on the quality of investors, the type of investor that sees Africa as an opportunity, right? Because there's a story of the continent, but then who's coming to the continent? I think we need to question as well, what type of person would see Africa as an opportunity? And I think those are the people that we really need to be talking to. If you're investing in a young startup in Johannesburg or in Nigeria, etc., I already have an issue. I don't have an issue with that, but I'd like to say there's a whole continent out there.
Out there,
So,
yeah.
the usual suspects of South Africa, Kenya, and Nigeria are fantastic. But what about Benin? What about Senegal? What about, the multitude? Francophone Africa, let's not even get started. But the type of support that investors are willing to give startups in Africa, I think also speaks to the quality of the investor, not necessarily the perceived risk that the continent has.
Yeah, I agree with that completely. So first of all, if you can perceive risk or if you can partner with locally, price it better, you actually have an advantage because of the misperception of risk. I think that the top investors by region right now, of course, the US and Europe. Recently, we started seeing a little bit more from GCC. I think there's a lot of similarities if you attended the MENA panel this morning about the nature of the market dynamics. This is ultimately still a developing region. There are more resource-rich countries and otherwise. Those dynamics are happening in Africa. And the idea of focusing on market, there's the big four, about 70% of VC goes to 4 countries, mentioned by Mimi. But we focus on the next set because we believe countries like Rwanda, whose credit rating is better than Turkey, has tremendous opportunities and talent. What we have in Africa that people don't understand is not only a young population of the average median age of about 17 to 18. The countries we focus on are all growing at 6 to 7%, 40% of the global workforce by 2050. In addition to that, it's talent. The number of schools and the development of spin-offs of people like Andela, Carnegie Mellon, ALN, ALU, all of that is producing tech talent that is driving what is now a real asset class. And there's been shifts in other markets as well until Yale decided that it would start putting some of its endowment into venture. Very few institutional investors were investing in venture in the US either. When that happened and it was discovered and Yale did extremely well, others followed. We believe the GCC has an advantage, although it's not currently among the top 2 investors, should be, because of those issues of distance and the recency and other kind of biases that tend to misprice risk are less likely for people from here because of historical ties, culture. There's strategic relationships between Qatar and Rwanda, between the UAE and several other countries, Saudi Arabia and several countries. It is the distance between Saudi Arabia and Addis Ababa is much shorter than the distance between London and Rome. We really have to keep these things in perspective. This is the natural partner of the region, in addition to, not to displace, to come in otherwise, because this asset class and this opportunity is just getting started.
Can I add to that, if you don't mind? I think I totally agree with that. And on top of it, what I find quite critical is the long-term perspective of countries in the GCC. I have friends who worked in other organizations like ADIA, Mubadala, etc. They take a 30-year perspective.
Absolutely.
They come in, take the time, get to know you, get to learn, and build over several cycles. That makes it much more interesting to have risk-adjusted return that tend to be excess returns over the usual market. So it's very important to position that as a long-term play and not look at the short-term as, oh, I'm going to come in, invest in the company, 3 years, I'm out. It doesn't work.
Or 10 max.
It doesn't work.
Yeah.
Yeah, exactly.
Right.
Interesting. Does anyone have any questions to ask the audience? We're running out of time and okay, just take one question. Climate tech?
Yeah.
Yeah.
Did you get that?
Yeah.
What's
Do you wanna,
the,
yeah.
the climate tech play?
Or infrastructure.
Our
long-term.
infrastructure?
Yeah.
So we focus on tech-enabled companies. We actually have in the audience a Rwandan company called Karis that basically creates a 3D digital twin using AI and drones as well as ground robots of assets that are being built. Skyscrapers, airports, stadiums. There's $200 billion worth of infrastructure that's being built in Africa at any one moment. That is not only going to drive future growth, but that is an opportunity, both the construction of it, but all the ancillary services that are there that are tech-enabled, like Karis is doing. There are others that are more climate tech, a huge range. Half of Africa is not grid connected. So just like we leapfrogged landlines, we'll also leapfrog centralized power and go to distributed off-grid power, which is going to unlock massive consumer demand and potential.
Yeah. Maybe I can add briefly to that.
Sure.
To your question, what we're seeing is that other regions like Asia, China in particular, etc., have been at the infrastructure play for some time. But what we're seeing is that the number of countries in the GCC, the pension funds, or the sovereign wealth fund coming in and bridging that gap. And I think, notably for Qatar, there's a huge opportunity in healthcare, fintech, obviously, tourism, and many agriculture, logistics, ports, etc., that essentially help build that infrastructure for any other companies in clean tech, fintech, and others to use as rails going forward. So clearly, for me at least, there's a long-term partnership opportunity there. But again, that narrative has to come from us.
Yeah.
All right. I think okay, one more question. Okay, sure.
Hi guys, so Michael, thank you, and shout out to Kenneth. So I have a question, right? So in Africa, I think we have a leadership problem, right? Most of the world only gets seen from outside, but if you're in Africa, you get to see what's really going on inside. So I think my question is, a lot of smart people in Africa do this stuff, but how do we manage to convince investors out there, or increase their confidence level that Africa really has like a big potential? And what are some of the conversations you guys are doing to manage leadership? So like convince leadership or convince investors to come in and ignore whatever it is that's going on. What are conversations we're having around that?
Okay. Okay. I can pick that because there's an impression I really like. So his question is about how can we convince investors still to come to invest in Africa
In spite of
beyond
leadership,
the
yeah.
leadership. Yeah. And there's an expression I always use. A fish rots from the head, right? Which is true, technically, right? So what it means is that you need to manage the process where you say, look, despite all these microeconomics, currency devaluation, political changes, after positive or negative, etc., you control your environment to a point where you can still grow despite that. Okay? So what I've learned over time, more than 10 years now, investing on continent, is that it's all about the protective measures you take. And once you feel that the business is protected and can grow with that environment, you scale much faster. And I'll finish with that. Some companies, they'll, for instance, be set up in Nigeria and Kenya, and suddenly they go to Brazil, LATAM, so that they basically manage the risk, right? And that is very possible. I know so many North African startups who are in the GCC, Southeast Europe,
But
etc.
not every startup can has the opportunity to do that because you have to build for your local audience, right, and local problems. So
That's what I'm saying. They build first,
yeah,
build in your backyard, and then figure out how you're going to scale and manage your operations.
okay.
Risk.
You
Just-
talked about Qatar and
no,
Rwanda,
no.
right?
Sorry, just a quick on this leadership thing. Look, it's kind of two-way. This generation that's coming up is not very tolerant of the hard, difficult ways it is sometimes, for example, to get access to services or power. That's why they're using technology to get ahead and solve those problems. Solving problems is an economic opportunity. And we're not talking about investing in sort of infrastructure, stuff that's very state developed. The fact that those gaps are there creates opportunities. Technology is a way to leapfrog and get around them. And this young population is driving innovation, and venture is the way to fuel that innovation. Once you have that innovation, you have job growth, you'll get a bigger middle class that will demand better governance. So it is both directions. All of the countries we're talking about are developing better laws around startups, better digital programs. They're all investing in digitization because they see what Kenya did and what South Africa did. And you get FDI levels of venture capital when you get the environment right, and that's what's happening.
Yeah, I think just to add to that, and just to quickly illustrate a story, DRC, for example. All we've heard about the DRC is the war happening in the east and so on and so forth. So, fortunately, it's a huge country. So what's happening in Kinshasa is not necessarily what's happening in Goma. I was in DRC 10 years ago. The sense of hopelessness in terms of this youth dividend that we're so proud of, right? That can actually end up being a liability as much as we say it's going to be an asset. We hope that it's going to be an asset. But the sense of hopelessness was really palpable in that country. And then with the proliferation of technology, in Kinshasa in particular, I went back about 3 months ago, and it's a completely different ecosystem and environment. Technology is really helping to young people leapfrog to the next level. Small enterprises, medium enterprises, big enterprises. What the hope is that we get to a tipping point, whereas, despite the leadership, we have such a critical mass of young people doing incredible things and growing incredible businesses that the rules and regulations and the policy ecosystem has to change along with them. And I really believe that we're getting there sooner rather than later.
Can I illustrate one point on that? Show of hands who knows KOT, Kenyans on Twitter.
Kenyans on Twitter.
Yeah. Kenyans on Twitter, or X, is essentially a third force in the country.
Yeah.
If anything happens and you touch on Kenyan pride, I can guarantee you will hear Kenyans on X, Twitter, KOT. So that is the power of youth and social media and tech to really drive change, even at the government level.
Agreed.
All right. I hope this was an interesting session for everyone. If you have any other questions, you can meet the panelists after now. So we have to bounce. A round of applause for us, please. Thank you.
Okay.
Yeah.